very critical. And one should not have the recency bias. Like, abhi kisi ko bhi puchoge, then everybody would like look at the gold and silver and will give you all the data that why it makes sense to invest there. But one shouldn't extrapolate, shouldn't have the recency bias. What has happened in last 1 year or 3 years will continue to happen every single year. It cannot deliver 50 and 60% every single year. And we have like long periods of let's say outperformance or underperformance of various asset classes, and that's why it's important to get the asset allocation right. That was a limited point, yeah.
So since the time of COVID, there has been a new induction of an absolute first-time investor in this financial market, and the base has enhanced absolutely very wide and large. So what we see for last 2-3 years time or so, almost every class of asset has grown together and enhanced its value. It is not seen in last 35 years that silver and gold together, copper and aluminum grow together, real estate stock market go together. Against inflation, US market and India go together. Generally, there is a contra which happens. But it is so seen today that last 2 years time, every single thing, even though the contra in the nature, are growing together. What's the thesis on that?
It's interesting. So there's a greed trade and there is a fear trade, and both of them like working together. It doesn't happen. The greed trade is like AI is most transformational and you need to invest in some of these companies. If you remove the 10 companies, not the max 7, you add like a couple of them more. And then of course the Palantir, etc. in US, the rest of the US market has substantially underperformed the rest of the world. But the money has gone to like US, China, Japan, Korea, Taiwan, little bit in Brazil for a different reason, but these are the 5 markets. All the 5 markets, there is one trade, which is the AI. I mean, there was a little bit of EV transition, etc. But largely it is the AI trade on one side, which is like the greed that no price is high for that. It is like the most transformational force. I'm in the camp that this is the most transformational force. It is massively underhyped what it will do to the humanity, but it's getting overextended. Last leg is like always very difficult to predict. I mean, last would be like the, what do you call, like parabolic or something. Where it ends, you really don't know. But there is like that greed, and maybe I don't know how it will end. There's some parallels with the internet boom. And then there is a fear trade that, no, I mean, there is so much of uncertainty in the world. We don't know about the future of fiat currencies. We don't know about the future of globalization, so on and so forth, geopolitical risk, etc. So buy gold, silver. And both are like running parallelly. People are extremely fearful and people are like extremely greedy. I talked about like the market cap of 3 companies. They've added $7.5 trillion of market cap in 7 months. This is unprecedented. This hasn't happened for like very long time. I don't know when was the last kind of mania which we have seen. Mania may not be the right word. So we really don't know. A lot of like theories are just not working. Of course, one can say the dollar has depreciated against gold and silver, but if you purely look at like in isolation, dollar index has been flat. It has not gone anywhere in last like couple of months, and gold and silver are like 50% up. So the fear was that the dollar will depreciate because there's a problem in US, but the DXY hasn't really moved much. It's been like 98, 99, and gold has still been kind of going up. So yeah, lots of things working which are very, very different this time.
Is that it cannot so happen that all class of assets goes up in the same direction.
There is still like actually the whole Alan Greenspan thing started in 80s, that any problem can be solved by printing money or either by the government or by the central banks together. And people think about like the post-global financial crisis or in the COVID, etc. The US public debt has gone up from $15 trillion to $30 trillion in 10 years time. $15 to $30 trillion. I mean, the kind of debt that has got accumulated. So much of stimulus has come, and then of course so much of monetary stimulus over the years. So there is still like a lot of money probably sloshing around.
So there is also a situation that we have advantage of seeing 5 or 6 cycles in last 35 years time. And
but also there's an interesting thing. I write an annual article. Last year I wrote that while people are very pessimistic about many things, but we are on the cusp of a very big investment cycle in the world. And what will and it was like very difficult to explain that how can, given the environment we are in, how can there be a large investment cycle? And I said the three, four factors that will drive a new investment cycle. Number one is the whole geopolitical risk. Because of that, Germany and many other countries will have to invest heavily into defense. Structurally, over the next several years, you cannot trust United States, you cannot trust that somebody else will take care of you, and then the risk is increasing. We look at Middle East, what happened India, Pakistan, India, China, look at the US, Iran, Israel, Iran, Russia, Ukraine, Armenia, Azerbaijan, so many things. And everybody is going to invest a lot more in defense over the next several years. A lot of it will be like tech. That's why Palantir versus all the other defense stocks, there is a big difference. Second is a supply chain diversification. Like right from 2016, Trump's first term to the COVID clearly showed. Then the COVID showed the recent events like rare earth minerals, chip war, if you read. I mean, people are getting more and more worried about being like too dependent on somebody else, which means this is not the end of globalization, but the new globalization, which I call the globalization of localization. Everybody would say, I will produce my chip, I will produce my semiconductor, I'll do this. So everybody will invest more because you have to diversify your supply chain. Climate change, this is structural, you will have to invest. So the whole transportation towards EV, your all other power grids and all of that. And last but not the least, in fact, the mother of all is like the whole AI boom, which is like hundreds of billions of dollars that's getting invested in whether it's data centers and the entire ecosystem. The one company, Amazon, this year will invest more than $100 billion in capex, more than the entire corporate India. That's just one single company. You look at Meta, you look at Microsoft, everybody talking about like 60, 70, 80 billion dollars of investment. And so is the case where like many other places. So put together all of these things will create a new investment cycle. Data centers, what do you need? Like you need a lot of power, whether it's renewable, whether whatever you do, thermal or any matter, you have to produce more power, and then it creates automatically its own momentum. So some of this, like what you're seeing in asset prices, is also due to maybe several of combination of these things.
But then maybe I'm sounding a little off the cuff. That's what our role is, because we are into M&A. We are business to convert business into cash or cash into business. And the taste of the valuation come at the time whether we can sell our business near to the value. Now, there is just an analogy. Be it Harshad Mehta time or a K10 stock or any such market. If you go back to the past, any substantial jump in the market is also supported by some credit expansion or some holding capacity which is in the hand of an investor. So that means the money has to be available to expand the value of money in the hands of a shareholder to increase the value of that stock. So if that be the case, you buy more, your stock is now always short supply, the price of stock goes up. Whether it's K10 stock or Harshad, let's not go to past. Now coming back to the same thing, when things are in such a manner where if everything is going up, either its poco consumption is increasing or the holding capacity of people have increased. And increases holding capacity need a credit supply. And that is where the problem which I see from outside when my friend from K Rating would know that the expansion of unsecured loan or the expansion of the loan which is end use is not known has also gone up in last 3 years time much more than the growth in the expansion. So can you find a correlation between the two, that the part of the money is used to hold the so-called currency of a speculation in nature? Maybe I'm proven wrong after 2 years time, but then our role is to be a little concerned and cautious.
No, maybe both at the global level and I come to India. So globally, I mean, this time the difference between the 99 2000, there are like many of them, but there are striking parallels and many differences. One of the differences, this time you won't have, let's say, WorldCom and many of those who invested tens of billions. I mean, so inflation adjusted, similar to, let's say, hundreds of billions of dollars in fiber and network and all of that. And you also had like a big credit problem. This time, because it's all about like equity value, so it can fall, but I don't know, the impact of that would be different than what happened last time. In India, it's interesting. For an economy to grow, some balance sheets have to borrow money. And there are three balance sheets that borrow money. Government borrows money, businesses, corporates borrow money, and households borrow money. In India, if you look at where we were in 2014, where you had the government had stressed, the fiscal deficit was high, and we had to kind of get into the fiscal consolidation over a period of time. And that's why government decided that I will deleverage over the next couple of years. We had to leverage a little bit because of the COVID. But again, you look at, even when like growth moderated in between, a lot of demands that no, you need to take, have a higher fiscal deficit, but government said no, I mean, public debt to GDP has to be brought down. So we have been on a deleveraging phase. Corporate sector, from an excessive leverage between, let's say, 2005-6 to 2013-14 has been in the mode of like deleveraging. Consistently, you keep hearing asset light, and they know that, investors love these words. So, I mean, no debt, no leverage, asset light model, cash flows, free cash flow as percentage is at the all-time high. We have never seen in any cycle corporate India having the kind of free cash flow it has today. So it's been like, because it's a phase, I think it has to change. For the good of the country, it should change. So the third balance sheet had to borrow money. And in 2014-15, stars just got aligned for households to borrow money because they were under-levered. And because the other two balance sheets were deleveraging, banks also thought, I mean, let's lend to the households. They were under-levered. And then series of things that happened, be it like the Jan Dhan Yojana movement, the UPI movement, the demonetization, and COVID, so on and so forth. Over a period of time, it became like easier and easier to lend to maybe the whole informal sector and the households, etc., because that was the like balance sheet which could take on credit versus the government and the corporates who are willing to take credit. But there are cycles. I think my view is that policymakers should work like very hard. How do we get corporate credit back? How do we get like the businesses, large businesses at least, to borrow a lot more than what they are doing? I mean, structurally also, from an equity investor, ROE comes from your margin into asset turnover into leverage. In last few years, leverage is not working. It's purely focused on margin. Asset turn also is probably at the higher level. Ultimately, you have to put more assets and then maybe take more leverage. But because equity is far easier to access, and given the valuations, there is very little incentive, or I would say maybe risk appetite to take more credit. Yeah.
So that's where my next question comes. You rightly said the word that investors like asset-light model. Now, what is asset-light?
वो इंडिया में ही है खाली, बाकी सब जगह ट्रेड बिल्कुल अलग है.
Yeah.
So if you look at like the big difference between India's cycle